Before we get into whether the guidelines are fair or not, let's just take a look at some of the changes that we've seen to those guidelines. One of them that stood out for me is that yearly turnover has been increased to $600 million. Net worth needs to come in at $300 million. But overall, what are the changes to the guidelines for qualifying companies to get exposure to one of those contracts for crude lifting?
Well, thank you, Samantha. One of the things we need to see from what the NNPC perspective is that, for one, they want to ensure that there's significant amount of transparency in the process and that the process is less questionable. And so in taking up the turnover to $600 million and the net worth, what they are looking at is size, basically. And they have then said that you need to put down $5 million, which then further substantiates their requirement for size. I think the NNPC is also trying to see how they could leverage these crude lifting contracts to see how developments in various strategic sectors like the downstream assets and investment in upstream assets, how this will help. And I would say that the criteria which they have put substantially addresses these particular points. One other issue that is of concern to several players is the exclusion, and will be the issue of how then do we develop local capacity. Because generally all of these hurdles haven't been increased would tend to exclude local capacity, which is a focus on the Nigerian content law to build capacity. Yeah. My view will be really for them to look at scenarios that would have two sets of criteria, one for the great large asset companies and some that are specifically focused on building capacity locally.
How fair do you think that these new rules are? Because the response from the NNPC is that the new guidelines are made to separate the boys from the men. Crude oil lifting is not child's play. You need to have big players involved in a game like this, and you need to ensure overall that they are companies and that you can basically rely on in this key sector of the economy. But from your view, how fair are the new guidelines?
Well, I would think, generally speaking, given the objective that the NNPC want to achieve, we will say they are fair. But however, you need to look at other broad development expectations which the government desires to run, especially in the area of building Nigerian capacity. And in that perspective, you will then see that a lot of people who probably would have capacity to trade, right, will be excluded from this. My views are that we should focus for the local participants on their financial capacity and the backing of their banks, okay, and the fact that trade is what this is about. It's about trade and about logistics, which they could probably reduce some of the hurdles for local participants to also play without diminishing the performance track record which they've had in the past.
In terms of foreign companies that are likely to be favored in this, is that the right term to use, do we have any names on the table in terms of companies that are likely to win tenders for crude oil lifting?
Well, there are many of the big trading companies in the world that are well known with dealing with Nigeria. And it will not be unusual to see that they participate again at this time. And I mean, the big trading companies of the world, like the Trafiguras, the Glencores, the Arcadias, are companies that basically typically would love to participate. And I think a lot of them generally would qualify given the hurdles that have been put in. So I would not be shocked if I see that they qualify again this time.
Staying in the oil sector, the Petroleum Product Pricing Regulatory Agency coming out with new rules on imports for petrol. What are your views on those qualifying guidelines for that side?
Again, I mean, Samantha, you will see that, again, the NNPC tends to want to reduce participation. The very reason is that it helps for control and management. But the truth is that these criteria border really around assets that you have, whether you have huge tank farms or you have stations, okay? But we could say that these assets are not the sole points or sole success factors you require to perform on those trades. I mean, size and assets is not typically equal to performance. And what I would have loved to see is to see a track record, a history, an evaluation based on history of performance in selecting the current companies that would participate this time around. But having said that, I would say that the companies that have now crossed the hurdle for the quarter supplies are not altogether rookies. We expect that as the time goes on, we shall look at the performance of these companies, and hopefully we then begin to see that, look, it's about trade, it's about logistics, and it's not about holding assets. The fact that you have huge tank farms or assets on the ground is not equal to saying you will perform on those import licenses.